Every single month, money quietly leaves your account. Not because you spent it, not because you forgot to pay a bill, because your bank took it. Small amounts too small to notice, but they add up. And today, I'm going to show you exactly how much your bank is taking from you and how to stop it. Here's the first thing you need to understand. Your bank is not your friend. It is a business, a very profitable business. And like every business, it exists to make money. The question is, where does that money come from? The answer is sitting right in your account, every single day. The reason most people never notice is because the money leaves silently. There is no alarm, no notification, no moment where you consciously decide to hand over your money. It just disappears, in small enough amounts that your brain dismisses it. But those small amounts, added together across months and years, become something that should make you very angry. Today, we are going to open the bank statement. We are going to find every hidden fee. We are going to understand exactly how the system works. And then I am going to show you 3 concrete steps to take your money back. Because once you see what your bank is actually charging you, you will never look at your account the same way again. Fee number 1, the monthly maintenance fee. This is the charge your bank applies simply for the privilege of holding your money, not for any service, not for any transaction, just for existing as a customer. It sounds small, usually somewhere between $10 and $25 per month, but that's exactly why it works. Small enough to ignore, consistent enough to drain you. Let's do the math. $15 per month. That's $180 per year. Over 10 years, that's $1,800 gone for absolutely nothing. No service, no value, no return. Just a fee for having an account at a bank that is already making enormous profits from lending out your deposits. $1,800 to hold your own money. Let that sink in. Fee number 2, ATM fees. This one is actually 2 separate charges working together against you. When you use an ATM outside your bank's network, your bank charges you a fee, and the ATM operator charges you a fee. So you pay twice, every single withdrawal. The average combined ATM fee is around $4.50 per transaction. Use a foreign ATM just twice a week, that's over $450 per year. Fee number 3, the overdraft fee. This is the one that hits hardest. You spend $1 more than you have in your account, and your bank charges you $35, sometimes more. Not because processing that transaction costs them $35, but because they can. Because you were $1 short, and the system is designed to extract maximum fees from the moments when you are most financially vulnerable. The numbers here are staggering. Banks collect tens of billions of dollars in overdraft fees every single year, and the majority of those fees come from a small percentage of customers, the ones living closest to zero. The people who can least afford it pay the most. This is not an accident. This is a business model, designed deliberately, operating exactly as intended. Fee number 4, and this one is the sneakiest of all. Your savings account. You deposit your money, you trust the bank to hold it, and in return, they pay you interest. Except they don't, not really. The average traditional savings account pays 0.01% interest per year. Meanwhile, inflation runs at 2 to 3%, which means every year your savings are actually losing purchasing power, silently, automatically. And here's the part that should outrage you. While your bank pays you 0.01% on your savings, they're lending that same money out at 20% on credit cards. They borrow from you at almost nothing. They lend to you at 20 times more. The spread between those two numbers, that is the profit. Your money, working hard for them, not for you. And we haven't even covered all of them yet. Wire transfer fees, $15 to $30 every time you send money. Foreign transaction fees, 1 to 3% on every international purchase. Paper statement fees, inactivity fees, minimum balance fees. Each one individually feels minor, Together, they form a system designed to extract as much as possible while keeping each individual charge below the threshold of outrage. Now let's add it all together. Monthly maintenance fee, ATM fees, occasional overdraft, wire transfers, foreign transactions. For the average person, this adds up to somewhere between $300 and $500 per year, just in bank fees, money you worked for, money you earned, quietly transferred to an institution that is already one of the most profitable types of businesses on the planet. And here's the real cost, not just the fees themselves, but what those fees could have become. $500 per year invested at 7% annual return over 20 years becomes $26,000. That's the actual price of bank fees, not $500, $26,000. Because every dollar you hand to your bank in fees is a dollar that never compounds, a dollar that never grows, a dollar permanently removed from your financial future. So why do we accept this? Because it feels normal. We grew up with these fees, our parents paid these fees, everyone around us pays these fees. So we assume this is just how banking works. But normal doesn't mean fair. Normal doesn't mean necessary. And normal definitely doesn't mean you have no choice, because you do have a choice, and most people just don't know it. There are 3 steps you can take, starting today, to stop paying your bank and start keeping your own money. None of them are complicated. None of them require special knowledge or connections. They just require you to make a decision that most people never make, simply because nobody ever told them they could. Step 1. Switch to a no-fee bank. Online banks exist that charge 0 monthly fees, 0 ATM fees, 0 minimum balance requirements. Because they have no physical branches, their costs are dramatically lower, and many of them pass those savings directly to you. Some even reimburse foreign ATM fees automatically. The product is identical. The cost is 0. The switch takes about 20 minutes. Step 2. Audit your current bank statement right now. Open your last 3 months of statements. Find every recurring charge. Write them all down, then call your bank. This is the part most people skip, but banks waive fees for customers who ask, far more often than you would expect. They would rather keep you as a customer than lose you over a $15 monthly fee. Seriously, just ask. Call the number on the back of your card. Say, "I noticed I'm being charged a monthly maintenance fee. I'd like that waived." That's it. No argument needed, no long explanation. Just ask. Studies show that customers who call to negotiate fees succeed more than 80% of the time. The fee exists because most people never ask for it to be removed. Step 3. Move your savings to a high-yield savings account. While traditional banks pay 0.01%, high-yield savings accounts at online banks currently pay 4 to 5%. On $10,000 in savings, that's the difference between $1 per year and $500 per year. Same money, same security, same insurance protection, just 400 times more interest. There is no reason not to make this move. Here's the mindset shift that makes all of this click. Your bank is a tool, not a partner, not a trusted institution looking out for your interests. A tool. And like any tool, you should choose the best one for the job, the one that costs the least, the one that gives you the most in return. You would not pay $500 per year for a hammer. Don't pay it for a bank account either. The simple truth is this: every fee you eliminate is money that stays with you. Every extra % of interest you earn is money working for you. Stop paying them, start earning. It is your money. You worked for it. You deserve to keep it. The bank has been quietly taking it for years. Today, that stops. Right now, open your bank statement. Find your fees. Write them down. Then make one decision: to stop accepting them. Switch banks. Ask for waivers. Move your savings. Small actions. Enormous difference over time. Because every dollar you keep is a dollar that can grow. And that is how real financial freedom is built. One decision at a time.